Americans are about to stop spending, as Nordstrom and Bed Bath & Beyond are leaving Canada ruthlessly. Why is everyone secretly hoping for a sharp and fast recession like March of 2020? Because people are tired of this killing them slowly with inflation and the silent killer of interest rate hikes every couple of months. Your 60-40 portfolio is not really growing because TLT gave back most of its gain and is only up 2% year to date. Friday's move is a technical move that I will explain in detail later. ISM service PMI in February suggests inflation is still a problem. On Friday, almost everything was up except for Bitcoin. The thing about oil price going up with TLT is that you know there is only one winner. Do you know US is still selling its oil to China? US is still yet to refill strategic petroleum reserve. Why Americans are about to stop spending as Nordstrom and Bed Bath & Beyond is leaving Canada. What's going on in Canada? Why is everything leaving? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you're a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Nothing is normal right now. With 4.5% interest rates from the Bank of Canada, Canadian banks are bracing up for upcoming credit and loan losses, setting aside $2.5 billion. RBC's new mortgage business has dropped 40%. And CIBC says a fifth of its clients can't make interest payments. Nordstrom to close all its Canadian stores, laying off 2,500 workers ruthlessly and unexpectedly. Retail giant Nordstrom will exit the Canadian market, shutting down its 13 stores in the country amid stagnant sales. The company said the move will cut approximately 2,500 jobs. Nordstrom's decision makes it the second major American retailer to wind out operations in Canada this year. Bed Bath & Beyond, which has come close to filing for bankruptcy in the United States, had in February cited insolvency to close its Canadian stores, according to court documents. Court filings by Nordstrom in Canada reveal a dismissal picture. The company lost money in every year of operation in Canada. The company told the court, adding that the Canadian affiliate generated only 3% of the group's net sales. Since its inception, the Canadian entity was given $775 million in funding. High operating costs and aftershocks of the lockdown led to the company's decision to shutter, it said. We entered Canada in 2014 with a plan to build and sustain a long-term business there. Eric Nordstrom, the CEO of the family-run business, said in a statement, "Despite our best efforts, we do not see a realistic path to profitability for the Canadian business." The company operated 6 Nordstrom stores and 7 discount stores called Nordstrom Rack in Canada. The local e-commerce website in Canada ceased operations Thursday. While the stores are expected to shutter by late June, the company said. The move will hit the company's 2023 prospects. The wind down is predicted lower net sales of the company by $400 million this year. Nordstrom's failure in Canada is not unique. Several other American companies have failed to become profitable in Canada. Target, which operated more than 100 stores in Canada, pulled out of the country in 2015. Another department chain store, Sears, closed its last outlet in Canada in 2018 after a 65-year run. You think your retail job in the mall is safe and secure? Think again. Back to the U.S. Americans look ready to start pulling back on spending as the effects of inflation and rising interest rates finally begin to bite. Retailers and others believe that consumer expenditure is likely to fall after kicking off the first weeks of 2023 on the rise. Consumer expenditure has proven remarkably resilient in the face of all that. Wage inflation has offset a good amount of the pain from price inflation, especially given the fast pace of job growth, according to the Bank of America. But when those dynamics slow down, even if price inflation comes down a little bit, you'll see consumers start to tighten their belts. The Fed might still stick with its aggressive monetary tightening. Even so, it could spell a recession and more turmoil for the markets. Bank of America analysts found household credit and debit card spending rose over 5% in a year to January. Meanwhile, the Fed's preferred PCE inflation gauge showed a 1.8% jump in consumer expenditure that month compared with December. That suggests the central bank's aggressive interest rate hikes over the past year haven't cooled demand, yet a very troubling development that makes a recession more likely. According to former Treasury Secretary Larry Summers. But the tide in spending could be turning. Top retailers Target, Macy's, and Best Buy all have said they are bracing for people to cut back on outlays in 2023, noting that shoppers are actively searching for discounts. The latest U.S. credit and debit card data for February also suggests spending is slowing down. Why? American households are feeling the pinch of rising prices for everyday food items, and that may be making them think twice about opening up their wallets. Target CEO Brian Cornell said his company was seeing a noticeable shift in the grocery store aisles. Spiraling inflation forced families to put discretionary purchases on hold and focus most on their spending on necessities, Cornell said in an earnings call. On the consumer side, they keep running into that one item that sticks in their head. Right now, eggs, which I can't imagine eggs as a big item. That's what they're benchmarking. It's fair to say most analysts weren't expecting consumer spending data to be so resilient in January. And some suggest those figures might be overblown. I think that February and March data will most likely be much weaker than what we saw in January. For a consumer spending perspective, a dip in consumer spending might signal the beginning of a sustained drop in demand in the US, but there are concerns that the fall might come faster than the Fed expects. The Fed will be fine with a slowdown in the consumer, even to the extent of what we're seeing. They're not going to officially say that they want to cause a recession, but they have essentially indicated that they would be okay with the recession, because that's how you get inflation back down to 2%. See, everyone is begging for a recession, even the Fed. Who can't wait to go burr, buy bond, and print more money? However, the Fed is not your friend. It's a private bank corporations that are trying to act like a government agency serving the US people. Do you actually believe they have your best interest at heart? When they told you, don't worry, inflation is transitory? We are not going to raise rates later to screw your property value or your stock portfolio. Yes, they are there to get your money. The trend is down for TLT. I would love to see it keep going up to 190. TLT had a bullish divergence on the RSI. Made a lower low on price, but momentum was up. Thus, it moved up on Friday, but we all know the Fed is not done raising the rates just yet. The 2-year yield was just made a new high last week. You know they are still going to raise at least another 75 basis points, right? We will have the lagged effects of one of the greatest and worldwide coordinated monetary tightening regimes to ever hit the economy. Over 80 of the world's central banks are doing the same. Rate hikes function with long and variable lags of about a year. March of 2022 marked the Fed's interest rate liftoff. Therefore, the negative ramifications of raising rates from 0% to what will end up being 5% over the course of the past year will become most acute starting this summer. Jerome Powell is destroying $1 trillion of the money supply per year. And that will continue on for 2 more years. What if that is still not enough because China is doing QE? And stock market is going up. Animal spirit is strong. Bulls are bragging again. Then they will have to raising it further. The higher they go, the harder we fall. Keep bragging, bulls. See you in stagflation, and the stock market will stay flat for 10 years like Mother Earth's stomach. And here is my client Ted Eazzy's book, Wicked Pussy Perfume. It is a femdom novel, and it's about money and the stock market. So order your copy today. And my book, Rainbow Focus. You are such a good boy for watching my video right till the end. Bye.